Card here.
Okay.
Right.
Morning, Peter.
Yep, it is. Right, we ready to go? Good. Okay, welcome everybody to this Audit, Risk and Finance Committee, and I'd like to open the meeting. And Sue, taking turns in the karakia, would you like to open with the karakia, please?
Yes. Kia hora, te marina, kia whakwa, whakapapa, punama, tino, umawana, hei huarangi mā tātou I te nei, roho atu, a roho mai, tātou I a tātou katoa.
Meaning.
Thank you. So next item is apologies. We've got two councillors with their apologies, Councillor Mike and Councillor Erin. I'm happy to move. Do I have a seconder? Thank you, Councillor Ash. All those in favour, please say aye. Aye. Just confirmation of the meeting. Our first item is actually our proposed audit plan, and we do have Bryce from Deloitte with us. Welcome, Bryce. Good morning. So I think we'll just take the agenda. Is there any? Yep. Agenda. So we'll just confirm the items on the agenda. I'm happy to move. Do I have a seconder?
I can second, but Can I ask a quick question?
Absolutely.
So about those things we did, what was it in the same meeting, the term deposit thing, which like the GWC? Do we know what rate?
That'll be in the Treasury report.
Yeah.
That was our last meeting, so I think that probably will be in the Treasury when we deal with our Treasury item. Thank you, Councillor Ash.
Thank you. Happy to second. Yeah.
Second. All those in favour, please say aye.
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 Are there any conflicts of interest that need to be declared? No one holds significant shares in the Auckland Airport. That was.
We should talk about Dargaville Airport, not.
That's all right.
I need 11 more warnings.
Sorry?
I need 11 more warnings.
Yeah, I do. Oh, you need 11 more warnings. All right.
You'll buy.
Okay, no conflicts of interest. Thank you. Just quickly, the minutes of our 16th of March meeting. Do I have a mover?
Move.
Thank you. Do I have a seconder? I'll second. All those in favour, please say aye.
Aye.
Right. First item on the agenda is our proposed audit plan. Sue and Bryce. Welcome to the meeting.
Thank you.
Thank you for coming.
It's all right. It's always nice to bangify. Lovely morning.
Oh, you can enjoy it. Yep.
So,
Now, Bryce, before we start, have you met the councillors before?
no, we haven't, Mrs.
Oh, maybe the councillors might just want to introduce themselves. And Mayor Craig.
Good morning. Welcome.
Ash Nair.
Hey, nice to meet you.
Councillor Ron.
Ron Randerson. And Jonathan Wilson. What was your name? Ethan. Ethan and Bryce. So we've been.
Oh, sorry. Just behind you.
Oh, sorry.
Running order, zooming in from Dargaville. Nice to meet you.
Nice to meet you too. So, so I'm Bryce Henderson. I'm the appointed auditor on behalf of the Auditor General. I've been auditing Hypera for 3 years now, so I have a little bit of experience on that, and I do a number of other councils in the region, including Whangarei. So, have some experience previously with council. A few of you around the table I've seen before. So, in terms of what this plan is, and thank you for accommodating this first up. This essentially, it's along the same lines as last year. Apologies that you're at the back there. It's the camera. Can she see?
Camera's actually up, literally up behind you.
Oh, okay. I'm so sorry. That's essentially the summary of what we consider to be the key areas. So the way the audit works is you have to sort of audit virtually everything to some degrees of granularity. Some things we go a little bit lighter on, some things are a little bit tougher on. But these are the ones which we think are the key ones which we tend to focus more on. So this isn't our audit plan per se. This is our audit plan is auditing this area, and then these are the key things. So this is, we're required by under law to tell you what these key areas are and a number of other things. But of course, at the end of the day, the councillors drive our decision making as well. So it's an opportunity for you to add your lens. If you think there's areas which you would like us to look at outside the scope, we're certainly open to conversation. It is a dynamic approach. It does change all the time. Obviously, we wrote this 4 months ago. We wouldn't have mentioned the word flooding. So again, it is dynamic all the way up to 30 June. But conscious that a number of councillors are new around the table. So we will, I don't know how you want to go through the chair. Do you want to go through page by page or summary or?
What I suggest you do, you introduce it, highlight any key issues that you want to go through, and then we might quickly go back by page of any particular questions that members have actually got, rather than actually go backwards and forwards.
So sure. So on the summary, the key thing I think to focus on is page 9.
Is that of you? That's of
our report.
Yep.
So this is the areas of audit focus, the dashboard. I'm just. It's this one.
Page number 20.
Yeah, thank you. Yeah, thank you. Yes.
So Ethan can go through the detail, but essentially these are the focus areas. So the first one is management override of controls. That's a mandatory risk for every audit.
21 of these.
2021, sorry.
Yep.
That's a mandatory area of focus. It's the same test for every audit, irrespective of size. And that really is focusing on things like journal entry testing, management bias, estimates and judgments. So it's a fraud test in terms of auditing language. It's trying to find fraud, and fraud to an auditor is not necessarily stealing cash. It's manipulating the results. So if you had, for example, a bonus scheme, depending upon results, trying to find numbers that impact results, et cetera, et cetera. So that's what the test is, and that's why it's a mandatory test for every audit, irrespective of size. And it's not specific to KitePro, it's the same test for every audit. So that's management override of controls.
Bryce, maybe just what we might do, if there's key items, we just actually, are there any particular questions on that particular high level issue?
Yep.
I think that might be appropriate. Councillor Ash?
Thank you, Chair. No, that's a good point, and I was about to ask you, when you say the evaluation of infrastructure asset is an issue with a high risk, what do you mean by it? Are we overvaluing, low valuing, or what is it?
Okay, so revaluation of infrastructure assets.
Revaluation of infrastructure.
Yep.
So the question is, so the risk is that your accounting policy is to keep your assets at what they call fair value, so you have two choices. You can do it at historical cost, which is what most people try and do because it's a lot easier, or what you call fair value, which is your policy. It's a council policy. And that's what you're trying to do there, is you're trying to say that the value in your accounts approximates or is close to the fair value. Now, fair value for a council, because it doesn't trade assets, is a replacement cost, what's called ODRC. So the risk there is that the council have to do, the management have to do two things. They have to figure out all their assets would approximate fair value or a replacement cost. And if that replacement cost deviates materially from what's in the books, they are forced under the law to revalue.
Always be upside. There may be broken footpath, but the replacement cost would be 10 times of those footpaths.
Correct.
We are overvaluing. I think the risk is overvaluation rather than undervaluation.
The risk is not, the risk is in terms of, there's always, assets will generally always go up because of inflation. So what we're finding, for example, this year is, and it's maybe 3 years ago, it didn't happen, is when you've got general inflation of 8-9%, but that's general inflation. When you talk about construction inflation, trying to get constructors and people building their house, it's not 8%. I can tell you that it's a lot more. So you're right. The replacement cost of your infrastructure is going up substantially. And what that unfortunately means for the council and for Sue's team is that, and that's your policy, the replacement cost of that pipe might have cost you $10 4 years ago. Now it might cost you $25 because you've got to find someone to to dig it up, find the pipe, et cetera, et cetera. So the risk is it's always going to go up. It's very, very rare that costs come down, as you know. The question is by how much. And if and there's no set rule, but if the increase triggers a certain number, 5, 10%, then you are forced through.
That's all good. All I wanted to know, through the chair, is if we are inflating the value through evaluation.
Yep.
In case the government take over those assets, Three Waters or whatever, would we get fair value? Or would they say, no, we're gonna see what the actual value is?
No,
Chairman, just I'll just answer that. They're not paying for our assets. All they're doing is taking over our debt.
They will not be taking the assets?
They're taking the assets, but
That's what I'm saying, at what value?
nothing, no value. Oh, at the value of the debt.
So why we are going for a high valuation just for the heck of it, looking with balance sheet, very nice, but actually it means nothing, right?
I think the Three Waters issue is a different issue, which we can come to. This is purely in terms of infrastructure.
The chair to comment.
Yeah, so yeah, I mean, I've been doing, I'm not sure if Bryce knows this, but I actually helped develop the depreciation valuation guidelines as in a previous life. So the reason council, one is Bryce has talked about the accounting reason. So we need to comply as there's a legal requirement, section 111, that we must comply with generally accepted accounting practice. That includes compliance with all the accounting standards, including the requirement to revalue our assets. So we've got a legal requirement to do that. The other issue is, and Bryce has alluded to it, that we need to plan for our replacement of our assets over their remaining useful life. Because the method that is used to set the valuation is called depreciated replacement cost. So we're going to value that asset on what it will actually cost to then actually replace that asset. It might not be for another 25 years, but we need to actually reflect the full replacement cost, and then our depreciation is an expense which we need to show in our financial statements. Now, renewals and depreciation will never agree, but they're actually a really good proxy over a long period of time to say is if we need to replace all our assets over a long period of time, that's what our depreciation should equal. So there's actually two issues there. One is we've got to comply with the Act. The other is we've got to provide legally for the replacement of our assets. And that's section 100 of the Local Government Act. So that's the reason we've got to do it. It's not so we can sell our assets.
Yeah.
Is that helpful, Bryce?
Thank you for answering that. The Three Water question we'll come to it later on. That's a completely different issue, and you have to demarcate your policy, rightly or wrongly. So most companies don't have a revaluation policy. They go for historical costs because it's way easier. But because the councils are required essentially to fund depreciation, because at some point assets have to be replaced, not now, but maybe in 50 years. The ratepayers in 50 years won't be thanking you when it's in your books at $5.50 and it costs $4 million. We're going, well, why didn't you tell us that? So it's a mechanism. It's across the whole council base. It's not specific to Kaipara. It's a council issue in the second.
Kids, go on.
Yep.
The screen behind you's got a question.
Thank you through the chair. Bryce, I think the first part of my question is for you, but then probably Sue, the second part's for you. My question relates to page 9 of the document.
Can we just, what we do is get Bryce to do his highlights and then we'll go back. Are there any specific questions? I think with that, Bryce, we actually got stuck on your key issue here.
Yeah.
And I think I've got one question. Can you just explain to the committee what I know we've got a little key down the bottom. We've got red and yellow in your key on
and green. Yeah.
Just what does that actually, does that actually mean council's bad? Because there's a perception because it's red, we're actually really bad. And just want to explain the audit methodology behind it and why we'd never get green.
You could get green, but so you're right. Maybe that it's not often auditors are seen as positive people. We are generally black hat groups, but that colour indicates the level of judgment. It's not an indication of competence. So for example, the revaluation of infrastructure assets being red it's highly judgmental, lots of estimates, very prone to estimation. So if you had a green means it's very, very easy. There's no estimation. Generally, you don't see green on these screens because if it was that easy, it wouldn't be a focus area. So if it was debtors, we go with debtors is very simple. You look at what you build, you look at your trade, and therefore it's a green. There's not a lot of judgment. So the reds, this screen by inference should be the higher judgment areas, and that's why we focus on them. So you look at infrastructure, contribution revenue, there's a lot of questions around milestone reporting, and also the flooding. The flooding will also involve a lot of judgment because they're trying to figure out rebates, funding, impairment. So red means high judgment, doesn't mean anything else. Orange or whatever, if you're not colourblind, or yellow, whatever it is, I'm slightly colourblind, there's some judgment in there, but it's not at the higher level. And green means there's virtually no judgment. So we can put a table underneath that, but it's not a competence issue or a council issue, it's a judgment issue.
I just want that clarified. Yeah, thank you, Bryce. Right, carry on with your key issues.
Yep. The third one is rate revenue legislation compliance. It's a very similar area. That's just making sure that your rating and your rateable council ways follow the law. It's very important, making sure you're compliant with laws and regulations in that space. Development contribution revenue. Again, it's been a history of I wouldn't say error, but it's quite a difficult area to know. There's lots of milestones. When you go for a contribution, there's lots of milestones in which a person will pay in, but the revenue standard says you don't do cash accounting. So you might find people pay, but you can't take the revenue. So that's trying to marry up the various milestones during a contribution versus the cash payments versus revenue. So there's a bit of judgment around that. SSP, statement of service performance, there's a lot of judgment in that, but it depends upon the reason why it's not read is some are very, very simple, some are not. So SSPs or non-financial information, I can't probably overestimate how important that is to the community. So historically, when you look at most audits, the focus is on the financial information. That's our core business. We're very good at that. The SSPs or quality information, that's the stuff which gets councils excited because you have other stuff which you're saying is really important to us as a council community. And so we're saying we have to audit that quite well. So last year, for example, drinking water was critically important. This year will be things like infrastructure, resilience, there'll be a number of other things. Some of the things which you say to the community are non-financial. It's really this group saying this is really, really important to us. The community really values this. And if we get this wrong, we'll be in trouble, or it'll be found. So SSP does have a level of judgment. It's not quite red, but it depends upon it. So that's something which we go through. And the last two, OAG audit briefs. So each year, the Governor General, Auditor General, sends out a brief of the sector. So it applies to all councils. And it's really his view on what he thinks is important in the sector and what he'd like us to focus on as auditors. Bearing in mind that he is the auditor, we're only his agent. And so there's a number of ones which come through. Probity, sensitive expenditure, that's what we go through and check. We do that test and we ask for expense receipts, which is quite painful audit as well, trust me, but it's trying to make sure that people are spending the money in the right way. There's a number of sector areas, and there's also things you've seen before. The key new one this year, which is up in lights, is the flooding, which is peculiar only to the northern region and the Hawke's Bay area to some degree. And so the view there is he's saying, look, I know there's an issue here, I want you to look at it. He's asked the auditors to say, go away and look at it, and look at it really, really well, which is why it's on this focus area. Understanding impairment, can they revalue their assets, what sort of funding's available, what's what they're taking to put in. And there's two distinct areas to that. So it's really, the OAG areas really are sector lenses around councils, which are often similar to all councils, and the other points are peculiar specifically to Kaipara. You'll find very similar ones across all the councils, like revaluation of assets is a sector-wide issue, but the OAG brief is someone looking in and going, I believe these are really, really important to me.
Bryce, just
Yep.
I understand. Does everyone understand what impairment means?
Explain.
Sorry?
Explain.
Pardon?
Explain, because maybe not.
So impairment is a there's various ways of doing it. So you've got an asset, right? You might have a road, right? You've got a road it's washed out, right? And you can't repair it within the financial year back to its original condition. So you've basically got to write the value of that road down. Well, basically, you've got two methods. One is you've got to work out the loss of service potential, which I hate because no one can actually do that. Correct me if I'm wrong, Bryce. The other one, right? The other one is the cost to restore. So you say, look, it's going to cost us $1 million to restore that bit of road. So, and you haven't done it by 30th of June. You might have done a temporary repair, but you still need to spend another $1 million. So you need to expense $1 million in your financial statements at 30th of June because you haven't repaired that road. And the rationale behind it is when you come to spend that $1 million, well, one is it's actually showing that your value, your fair value, you've actually got an event that's caused you to have a loss from an accounting perspective, but from a reporting perspective, when you repair that road, it's not actually a transaction that is highlighted in the financial statements. So you basically reverse the impairment when you spend the money. And if you've got the impairment estimate right, in theory, they should offset each other. That's the theory behind it. So when you had the Christchurch and Kaikoura earthquakes, there was significant impairment to those assets. So when they restored the assets, they came up to the original value, but often what happens is that you've actually increased the asset because you've done other work, and that's called betterment, and that's a new asset.
I think using roads as a description was excellent.
Sorry? Yeah, well, I know, yeah.
Roads is a hard example because it's
Yeah.
very judgmental.
Yeah.
But just a clarification on that. So after this Gabriel floods,
Yep.
a lot of money came to consults, including us. And there are a lot of projects which are in the pipeline.
Yep.
Which means that money is there and the projects are unfinished. So would that be put as an impairment or not?
Because
Who will decide that? It's judgmental. So
well, actually, yeah. So Sue and her team do an estimate,
Yeah.
and then Bryce and his team
Yeah.
review that to say, and that's where Bryce is talking about judgment.
Yeah.
And it's a judgment call. He would be looking, well, how have you actually done the calculation, Sue? Is it reliable? Have you allowed sufficient, is it back of the envelope, or have you got detailed costings?
Okay.
Yeah, I don't know if you want any more detail, if you want any more detail, I can give you more detail. Often it's a good analogy for other councils have asked the same question, is that if you think about, take the infrastructure out, because some people get roading is quite confusing because it's, how much the whole payment. If you think of a house being flooded instead of the roof's fallen in, right? The house costs $1 million today. The valuer will come along and go, Bryce, I don't know how much it's going to cost to that roof. It's quite hard. So often valuers will say that house to replace will cost $1 million. So the valuer will say it's $1 million. But I'm going, mate, but if I bought that house, I'm not going to pay $1 million. It's got a hole in the roof. And that's where impairment will kick in. They'll say, when you fix that hole, it'll be worth $1 million. Yeah. But then what we'll be saying is, but how much does it cost to fix the hole? So that's where there's an interlink between the valuation and the impairment. We'll say to fix that hole is $100,000. So we'll take the fair value of $1 million and we'll take up 100,000.
Yeah.
And then during the year or whenever you fix the house, 100,000 gets spent. So it is real cash. It's leaving the building. And then suddenly, guess what? In the pivot world, the house is now worth $1 million again. So there is an interplay. Valuers do struggle with impairment because what they're looking at is they're saying, because they're not quantity surveys in terms of surveying the damage, they're saying, look, on price, I'm just looking at their house, right? So some valuers can do that, some don't. And the earthquake's a good example. Valuers going, well, I've got no idea. So they valued, as I suspect a lot of valuers are now, they're valuing it as if it's the assets appropriate. It's a lot of work to try and figure out impairment. And so when you go into infrastructure, it's very hard. Like if you have coming in from Mangawhai, just forecasting the road, half the road's dropped away. Yeah. How much is that going to cost to fix? No idea. How will you figure it out? Well, ideally you have to get a quantity surveyor to come in. You could spend $10,000, $20,000, $30,000 just trying to figure out that piece of road. Yeah, and that's the trick which management have. It's a very hard
No, that's right. I mean, you never know it will be fixed this year or over the 3 years.
Yes.
Know that.
I think the issue too is, right, I think what where Bryce is alluding to, and I think probably there's going to be a real hard decision is, how robust is that impairment calculation? I got donkey deep in Kaikoura post-earthquake. The first year they got an audit opinion because qualification. Emphasis, no, it was a modification because they couldn't accurately estimate what it was actually going to cost to repair in that particular year. The subsequent year, because of the work that had actually been done in terms of the government funding, the detailed costings, the auditors agreed that yes, that there was a robust schedule of what it was going to cost. They also had some confidence, and this is what auditors are looking for, some evidence that those costings were robust because the council had actually done significant work, and the works to date replicated what within a margin of error what it was estimated to cost, the actual cost. So they were actually quite confident.
And that's a challenge to management.
Yes.
It takes time and it takes resource. It's not something which Sue and her team can do in isolation. You have to involve other specialists, and that's why that's why the Auditor General is saying flooding is really important, because if it had happened a year ago, it would have been a bit easier, but the fact that it's still recent and there's a constraint on specialists and QS and et cetera, sometimes some councils are going, I just can't get the people.
Yep.
And then we'll figure that out. Yeah.
And I think, Bryce, is it fair, or maybe Sue, is because of the limited resources of of everyone, is it actually better not to waste any significant time on it? Say this is our best guess, and actually say this is our best guess. It could be wrong, which then could lead, or probably would lead to, in my opinion, a modified audit opinion. And is council happy with that modified audit opinion, considering the amount of work required to actually resolve the impairment calculation? And that's probably a discussion that needs to happen between Bryce and Sue, and then come back to council. Because I don't want to spend $500,000 trying to get rid of a qualification when even having done all that work, without most respect, you still might disagree with the value anyway.
Yeah, I think it's a fair question. We shouldn't preempt the outcome before the outcome. I don't think, in terms of governance, any council should go into the audits thinking they're going to qualify. But the question is fair. At some point, given the resources and things you've referred to, is it just a bridge too far?
Yes.
And that's a conversation you don't want to be leaving to the council meeting at the end.
No.
So you'd be saying, hey, we need to, as a group, do the work where we can and figure out, is the gap too big, and get consensus so no one feels ambushed, for want of a better word, and saying, well, Sue, if I knew this, we would have pushed you harder, or we've delayed, etc. So it's a fair question, but again, until the work's done, maybe Sue can comment. I certainly wouldn't want to be putting that conversation on the table.
Oh, no, absolutely. But all I'm saying is it's something that we may need to put on the table.
So,
and yep.
Yeah, so through the chair, our roading team has said that fixing all our roads is going to be multi-year, long-term, and they're not going to have all the answers in the near future, because there'll be a number of ways to fix some of the solutions to fixing some of the roads, and they won't have landed on them for some time. So there is going to be quite a bit of guesswork with the roading.
Yep. And then you need to sort of have a three-way conversation, city manager, and then probably bring that back to the, yep. All I'm saying is expect that discussion.
Yeah, we should probably at some point figure out how we report back through to the audit committee or through the council. Yep. Prior to the formal council meeting. We need to figure out a process.
And I think the issue, the earlier elected members are actually, when you have got an initial position, I think the earlier the elected members are informed. So then, as Bryce said, we're not ambushed. The last thing anyone wants to do is to say, look, we've got this issue, right? And this is the only option, without actually being forewarned.
And through the chair, just to give some examples, when we first did the report through to council telling you about the cost of the storm damage, I think we reported 18 million for our roads. Yesterday, Calvin said that it had risen now to 28 million just for the roads alone, and that was his most recent estimate. We can expect that to be higher when he actually comes up with the final solutions. So, yeah, that's the sort of, the figures are just moving, because when they actually do the full investigation, they're finding it's far more than what they originally thought.
And through Chair, the other point, of course, is you have to figure out there's two pieces. There's the damage or the impairment, as we call it. The second thing is what sources of funds does the council have available to fix that? So in a number of cases, you do have central government funding. The Tahi, for example, is obviously cool, but in some cases you don't. So trying to figure out that gap. So it is somewhat multidisciplinary. It's not just simply the assets. It might be, well, if the asset was 5 million, my funding would be 2. If it was 10 million, my funding would be 5. So you can impact a few lines of your accounts. But it is a very tricky and judgmental area, and management, there's a lot of, don't underestimate the amount of work that management have to do. So I think the point's well made that we will have to figure out as fast as we can the process and the gap analysis, for want of a better word, and then make sure we go through the CEO and the mayor and then through to the council in terms of our initial thinking, so you don't feel, so you feel engaged and you have the ability to direct.
Okay. Yeah.
You just try, so when we would get this, would we get it before we finalize the rates? Because it's gonna affect our annual plans too.
I know, yeah.
The submissions or the final, sorry.
So carry on, yeah.
All I was asking is at what point we'll get this conclusion on figure impairment? It will be before we finalize the rates or after we finalize the rates?
So,
Yeah.
no, what we're talking about is for the annual report.
Yeah.
So no, it won't be before you finalise.
Okay. All right. Thank you.
Sorry, Peter, did you actually have a question on page 9 of the report or 9 of the agenda?
9 of the report.
No, 9 of the report, sorry, page, okay. Have you finished your, right? We can have your question now, that would be appreciated.
Thank you. So the question was, so page 9, and specifically the development contribution revenue. So I was just wondering, because that seems to me to be the most significant risk, and including for fraud. And then you've also put the level of management judgment required at high. So I was just wondering why it's only legislative compliance that you're tagging your planned approaches for D+I and operating effectiveness, but you haven't done the same for development contribution revenue. So that was the first part of my question for Bryce. And then the second part of the question is for Sue, is for who is the manager in charge or responsible for development contribution revenue?
Okay, no, good question. So the third column is plan controls approach. We have these terminology. I'll just summarise the terminology for those others. We have D&I and we have OE. So OE means control reliance. And that's where we believe the controls of the council are such that we can rely upon the controls. And that means we can do less work at year end. The issue with development contributions is we don't believe the controls are strong enough to rely upon. So it's just maybe for a number of reasons. Essentially, it's obviously staffing numbers, history of error, etc. So in terms of DCs, there's been a history of error. There's a lot of reliance on key people. So the decision was made that we don't believe we can rely upon controls. So in terms of that, that's the reason why we don't do controls. It is a judgment area because, as you said, or inferred, there's a lot of complexity to the DC billing system. So you might have 9 or 10 from memory milestones in terms of when you pay your DC. So you get an invoice when you submit, when you have A, B, and C done. So we'll invoice that. The council will invoice that at various times. That's very, very easy to do. It's quite a good system and it's quite obvious. The accounting problem is that the fact is that the fact you bill someone doesn't mean that the revenue's been earned. So if I put a claim in, I submit a claim in straight away and I get billed $500, the accounting rules might say, well, that's nice, that's just, but the council hasn't done their work yet, so therefore you can't recognise revenue. So the judgment area around that is, because there's so much judgment, and it does really mean someone at the end of the year going through the DCs, which is what normally happens. No control reliance, or no OE as we call it. And it is a fraud risk because it has got the ability to be manipulated. So just to clarify again, fraud risk doesn't mean that we believe there is fraud. In terms of auditing language, fraud risk means there's the ability to do it, not there's a means or a competence. So some people get excited by the word fraud, but we're not saying that at all. We're just saying that it has got the ability, because it's got high judgment, people can easily make a mistake, therefore it's got the ability to have fraud, and that's why it's red, and as you picked up, it's got a tick in the fraud column. Does that answer your question on that?
No, it doesn't. So my specific question is, why would you not also apply to your planned approach testing of the operating effectiveness of the key controls, as opposed to just the design and implementation? If you're saying it's a good process, wouldn't it be OE or both?
The process for billing is a good process. The process for recognising revenue is not strong enough to rely upon controls. It's a once a year exercise. So what Sue does, one of her team will go through once a year and true it up to get it right for year end. So to do OE, it has to be done every month the same. What we're really saying is that process has been in place for a whole year. It's been operating effectively. It's been monitored, etc. The way DCs work is the billing is done that way. But in terms of revenue recognition, which is our risk, that's only done once a year. So that's why we don't do OE.
Thank you. And then so is that second part of my question, who's the manager in charge of that? Is that you?
So, yes, so how we, and Bryce is right, that we only accrue at the end of the year, because to us, development contributions, when we receive the money, it's only really as for an accounting exercise at year end to make sure it goes into the right year. So what we do is on subdivision, we invoice basically residential lots, the developer, the number of residential lots. On commercial, it's based on the area of the building. So the footprint of the building, and we invoice when we know we see the plans for development contributions. So slightly different times of invoicing.
Okay, does that answer your question? Okay.
Yes, thank you.
Sorry, Bryce, for giving you the third degree, but I think it's really.
That's what. Yeah, so that's the summary. So I think just to clarify, the flooding event's really the only brand new one. The OAG every year has slightly different lenses, so that does change, but the flooding has been brought on obviously since January. The rest of these items are very similar to prior years, but there's a different lens, obviously, in terms of how much emphasis we do, but these are all key areas. These areas haven't really changed. So that's my comments.
Okay, thank you. Councillor Ron?
Thank you. Can I ask who monitors your role? I don't suggest that this is likely under your watch. There were previous auditors that failed to notice a $50 million increase in unauthorised expenditure. So who do you answer to?
Who do I answer? I answer to, so the Auditor General is the auditor, and he assigns approved auditing firms to do his work for him. So who audits me is the Auditor General audits me.
Can I also throw another lens on it? I would cite part of this committee's role is to monitor Deloitte's, how to describe it, your delivery and issues and how they've conducted it. I am aware of one audit committee, at least one audit committee, that were unhappy with the audit, the appointed auditor. They raised it with the audit organisation and took some time, and that auditor then was reallocated to another council, and the council got a new one. So that's our job, is also to say is, look, I'm going to come on to the fees, I'm sure, Bryce.
Yep.
You know, and that's going to be a really interesting debate, I'm sure, or questions. But, you know, so that's how, you know, if we're not happy with the responses we're getting from our auditor, we've got two avenues. We can take it to the Deloitte managing partner, or we can take it to the Office of the Auditor General. And that's our job. That's, if you look at our general terms of reference that's where the audit committee actually, the original purpose of an audit committee, not an audit and risk committee, came from was actually to monitor and appoint the external auditor. Now, we can't appoint, that's done for us by the OAG, but our job is to monitor and to have those interactions.
That's right, Matt, hence the questions. There's no stupid questions. Sorry, you have a question?
Yes, can I also ask, I've heard a considerable attention to internal matters. Do you also audit and report on external influences of real significance to the council?
Could you give me an example?
Yeah. An example would be, we see at the moment that we have a very large portion of expenditures within KIPRA and within council that are related to the situation of China. Now, I suppose I'm specifically inquiring, do you see that demise of any significance?
I'll have to circle back. I'm not sure what you mean by spending money on China, but anything that doesn't involve a council spending is outside our scope. If you're saying that KIPRA is spending money on something to do with China, then that would be of interest or concern, but I'm not sure what that means.
I think it might be referring to yesterday when you were talking about not KIPRA District Council, but the income of our ratepayers is dependent on forestry and milk production, which obviously China's pulling back on.
Thank you.
I'm not sure what the question, because the council itself is not spending money in China.
Yeah, those are external risks.
So we consider external risks in two areas of the audit. We consider it in terms of going concern or the ability to fund yourself. If, for example, you have got a forestry, actually, it's a very small forestry, luckily, but it's a very small forestry. It's relatively easy to audit, but forest prices have dropped away recently. If you had a significant forest and it was highly reliant upon log prices, and log prices were all exported to China, for example, then when we did our work around the valuation of that forest, that would be taken into consideration. So when you do fair value, you do consider those issues. The second area we look at is in terms of not necessarily going concern, but if there's certain assets on your books which are dependent upon cash flows or demand, that's where it might kick in. So the answer is not directly, we don't. But if it influences the numbers or the ability of people to, say if it was rates, the ability of people to repay rates, then we do consider that. But I think the general answer would be no. And just in answer to your other question around your prior comment or who were accountable before, I think what's important for the ARC to recognise through the chair is that the councillors are responsible for the accounts. So you're very good. I know where you're saying it's the auditors, it's around the auditors, but the question would be, it's in terms of the accounts, it's councillors first, audit second. So the councillors, I don't want to go into detail, but the councillors sign the accounts first and then we ratify the accounts. Hence the importance through the chair of challenging and actually having this group understand the issues. I think it's really, really important. And as I said before, I think making sure this group and ourselves are happy with the numbers. It's not necessarily us, not adversarial at all, but I think it is a partnership, and we are trying to work together to figure out, is it a true and fair position? Hence the question around when do we, if we feel we're not going to get there on something, it's not a case of Sue says yes, I say no, and it's my word. It's a case of we sort of want, you can get to that position, but you don't want to go back to the relationship. It is a relationship, and therefore it's important that everyone's on the same page and they understand the decision making, and including myself, is the decision we're making rational? Do you understand why we're making that decision? The same thought process we go through with management, has management gone through that full process? So there's a tripartite type arrangement, us, management and yourself. And I think it's really important we probably just elevate that sort of relationship the first year round so everyone feels comfortable with the decisions that made, because I don't make the decisions in isolation, nor does Sue. It is a tripartite position. So I think it's a good question, and one we should just be cognizant on, because there's a lot of new people in the room.
Yeah.
That's fair.
Yeah, totally. I mean, I've been accused of being too aggressive with auditors because part of our role, right, the auditors actually might have an opinion, but it's only an opinion. And it's our job also to challenge that opinion, right? And the auditor shouldn't be, how to describe it, offended that we're actually challenging their opinion, just like audit should be challenging us and Sue. How did you arrive at that? To me, it's not we're not actually like this, but it's actually it's a robust, open discussion. Oh, you got another question behind you. Peter Hero?
Yes, thank you through the chair. So the last question that I had is, will we be doing an audit, because I can't see anything on the report, of the mayoral relief fund and how that process worked and the money expended?
Is that part of the flooding relief for Mayor?
Yes, so the specific mayoral fund with criteria set, a panel set, and the funding allocated.
Yeah, so the answer is yes. As part of the flooding area will encompass the resources and the funds that are available to help alleviate the disaster, also encompasses impairment. So we focus a lot on the asset side, but there is also a funding side. So your answer is yes, we will look at the funding. Has it been appropriately spent? Is the number right, etc. So yes, we will.
Thank you.
Okay, thank you. Anything further you want to bring to our attention, Bryce? So I think I've probably alluded to.
No, I think we talk about materiality. Materiality it isn't formulaic, but it is very much based upon expenditure. So 1.8 million essentially. And the only other thing is that the quality of accounting records goes back to the point. It's really important for these key judgment areas that management have a position paper. This is our view. This is what we're doing. There has to be an audit trail. When you have a lot of conversational points, it is a red flag, and it's very, very hard to land. And going back to your point around governance and making sure you understand how all the parties work, you need to have the management at start. This is on page 17 of our report. It's really important you have a position paper and with the facts, because the decisions we make depend upon the facts. If we get the facts wrong, we can make the wrong decisions. So it's really important that that follows through. And the last piece, which has been alluded to through the chair, is the fees.
Page 45 of the agenda.
Yep. We have put together a submission through to Sue. We haven't worked through the detail yet, so the fees are still being worked through. It is an increase. What we've got is, well, we haven't got information, so I'm not sure if you want to go into a lot of detail now, but essentially we've got the last 3 years actual hours. How do fees work? It's a very simple process in terms of you put your hours in. There's an agreed rate within reason, a rate per hour, which does vary somewhat between councils, but there's like a minimum rate we try and achieve. And so really the trick with councils is the hours. If we spend more hours, it costs more. If we spend less hours, it costs less. And so every year there's a few downs, but generally there's more ups, like inflation. So that's really the process we have to go through still.
Through the chair, just on the fees, I'm looking at the estimated audit hours, and just total audit hours are down by almost 300 hours, but the fees are going up. So obviously just 2 appointed auditors more will costing more than 200 or 250 hours, is it? I'm just trying to figure out why we are paying more when the estimated audit hours have gone down from 631 to 1350.
Yep. So that's a reflection of 2 things. So the first thing is, historically, we've accepted, rightly or wrongly, quite low rates. So the rate per hour has been really, really low. So what tends to happen is fees tend to be set prospectively. So if I say I budget the hours and say it's going to cost 1,000 hours, and the rate per hour might be $150 or whatever, if I spend 1,400 hours with lots of issues, last year we had a lot of issues around revaluations and all sorts of things. It's a lot harder for me to say, hey, I spent 400 hours, I'd like $60,000. What tends to happen is I absorb most of those costs, as a firm and say, look, I'll ask for 10, 20, whatever, but I'll take the hit, I'll take the cost. And then next year I'll try and reset. So we're always a year behind. So the reason why it's going down is we've historically over time we spent more time doing it. There's always two sides to every, we've taken the hit. So I've taken that margin. And then I'm saying it's got to a stage where my rate per hour is, I should become a plumber.
You're getting compensated for the previous work done, isn't it?
No, it's saying that at some point the rate per hour was so low that I have to reset. And given inflation is running at 8-9%,
Can I also just, I think Bryce has missed an important point, but the fee that is negotiated between us, the council and Deloitte is also approved by the Office of the Auditor General.
Correct.
Right? So the Office of the Auditor General, they've got a person who has actually got all the council's fees, and they're saying, is it reasonable that Kite was paying this, a similar sized council is paying something different? And also, you've got other audit providers, you've got Audit New Zealand and EY. Have I missed anyone off? EY?
Most of the big four do it, but EY and Deloitte do.
Yeah, and we've got another question behind you as well. Thank you.
Yes, thank you through the chair. So just my quick comments on that. So when you drill into it, it's $235 per hour, and that's inclusive of GST, which I think is quite fair and reasonable. But when you look at the hours, there's quite a large and substantial amount for non-CA qualified staff. So you've got in there the budget of 770 hours for that. And so I'd like to see if we can drill into the detail around that a little bit more, because who are these staff? What are they? Yeah, what are their rates?
The rates, I'm not sure the GST rate, the rate for Kuiper is actually, so back to, maybe just to clarify, so the OEG do audit us, back to your point. So what they do is they audit our hours, and they also look at our rates. So the Kuiper rate is one of the lowest.
Sorry, are you saying that that's included in the non-CA qualified staff budget of 770 hours? Are you saying that that's?
No, sorry, before I get to the hours, I'm just sort of saying that the 235, I haven't got it in front of me, sorry, but the rate's about 180. It's actually quite rate per hour, but if you're including GST, are you including GST plus VAT? Okay.
Yeah.
Yeah. Well, you get your GST back, so it probably should be pre, but the rate per hour is actually quite low. But in terms of your question, which is around the non-CA, it's a leverage model. So what non-CA people tend to be from first, second, or they've usually got 3 years experience.
Yep.
So there's a large part of a council's accounts which you want to try and get the leverage from. So you don't want very, very senior people and quite specialised people doing quite easy sections. So you need to have that leverage to get the rate per hour down. If you only had CA people, the rate per hour would be closer to 300. It would be so. It's just like any organisation. You have senior people at higher rates, lower at lower rates. So you need the larger portion of non-CA is actually the best position to be in, because what you're saying is it's quite a simple audit, and we can push down that, and therefore your rate per hour drops. The issue with a lot of councils is with all the issues in place around revaluation rates, DCs, flooding, etc., sensitive expenditure, SSP and probity, there's quite a lot of areas which you couldn't get. If you had a first year out of university, we've done 3 years university, we've given them 50, 60 hours training, they're not areas those people could do, but it's just too hard. So that's why you definitely need to have that lower non-CA piece there, but councils tend to have quite a lot of pieces of their accounts which they just don't have the skill set to do. So I can provide, and whatever detail you need, I can provide it down to individual people. But you do need that leverage, as we call it, to keep the average rate down. Because you're right, their rate per hour is quite low, but then you have more senior people. So it is a blended rate, as we call it.
Well, overall, it's still over $200, even if you're averaging out all of the hours. So I understand how it works. The the 75 will be probably double or triple the amount for the appointed auditors, but yeah, that's a significant amount of hours for non-CA qualified staff. And yeah, what are their rates? Because there is a considerable jump up by quite a bit from last year. And yeah, as Councillor Nair says, it's less hours by 300.
Okay, well, maybe the best thing to do is take the questions and rather than trying to answer, I can.
Yeah, I think we'll, Bryce will circulate the information to all members of the committee. I think it's the appropriate way.
Then you can ask whatever questions and we can.
Sorry, Mr. Chair, if I could just comment.
Yep.
We have been down this track in previous years inquiring about the charge out rates for various, and Bryce has previously provided that, so perhaps an update would help to.
I think I think Bryce has offered to circulate that. I think that's probably the easiest way. Thank you. And someone's very kindly making a note to follow it up for me. Thank you very much. Okay.
Plumbers are right up there.
Yeah, I know. Yeah.
I do NZ Plumbing World, so it's, I think I'm wrong. I've chosen the wrong profession. It's a great job. I tell you, if you've got kids, put them into trades.
Oh,
go for it.
Well, historically,
a minute that will probably get in trouble, but it's a great business.
Any trades at the moment. Previously, I don't know what's going to look like in the next 3 years, but the last 3 years have been very kind to the trades.
Yeah,
try and get one.
Right, is there any
I think we've talked a lot about. I think it's really important that council asks questions, the council through the chair, and that can be done. Post meeting through you. Very happy. So I think the key thing is transparency in this group feeling they've got the ability to communicate with the auditor, because that certainly is a channel we have to do. And then obviously in due course we'll catch up with the mayor and the CEO separately around their vision and their process.
To the chair, I just want to add it when you send that information, because as a new councillor, especially like me, we are very worried about the state of affairs in finance in the council. And when you said you are having 30 more audit managers, is it a reflection on the way things have been done in the past? So I would like some commentary on that. Thank you.
In the communication?
The one information you're sending.
Yes, yeah.
You while you're non-CA staff, you're having 300 less. The audit manager, you're increasing by 30. So is it a reflection on the way of things? Why you have to do that? You know,
I can answer that through formally, not now. I can do it now if you want, but I'll do it.
In the commitment.
Yes.
Thank you.
Okay. All right. Any other? Right. So thanks, Bryce. Are there any other specific questions we've got on? We just quickly, and we've spent. This has been really good. Are there any other specific questions that the committee have on any other items of the audit plan? I mean, I've got a couple, but I might take them offline because it's probably the technical ones, particularly around the change in accounting standards for us. I just need to appreciate the time we had the other day, and maybe
we can talk offline.
We can talk offline because I don't want to bore the committee with talking about accounting standards. It's boring enough as it is. All right. No further questions. Thank you. So we've got a recommendation that we approve the Deloitte scope of audit planning report for council statements for the 30th of June 23. Do I have a mover for that? Thank you, Deputy Mayor. Do I have a seconder? Thank you, Councillor Ash. All those in favour, please say aye.
Aye.
It's carried. Thank you very much. Thank you.
Thank you.
Thank you for coming all this way. I understand you're heading north now, are you?
No, I had Whangarei yesterday, actually.
You had Whangarei yesterday?
But I had another one last night, so I had to dial in, but
no.
Yeah, same issues.
Thank you very much for seeing you in the flesh. Unfortunately, I've got a number of surveys I've got to do for the Auditor General on auditors' performance, and one of my biggest grumps is I didn't actually get to meet them physically in the last 12 months. But thank you very much, Bryce, for that.
No, I think we will. Yeah. All good.
All right, thank you.
Thank you.
Thank you. Our next item is our Treasury Management report on page 47. Amanda, welcome. Can I be, no, there's a mic there. I just wonder whether, just for the screen, I wonder if we actually put them here and move the mic. Will it stretch without breaking anything? Yeah, there we go. Now someone can actually see you. That'd be good. Thank you. Yes, you squeeze in. Thank you. Right. Take your report as read. Are there any key highlights that you want to bring to the committee's attention or any further information?
In answer to Ishmael's query, we've got the percentages of the loan.
Yeah.
Page 2 of the paper.
So that's page 48 of the agenda.
Correct.
Yeah.
So you can see the new loan there, 10 million at 6.0.
I just have a question on that through the chair. Just that the basic financial, whatever little I know, I always thought having term deposits and debt side by side is a losing and a dangerous combination. While we have a 10 million debt, 10 million deposit and 44 million debt, because the infrastructure, and that's what is coming to the $10 million, we have 6.05. We are paying for it while we may be getting like much lesser amount in deposit. What's the reason for having those term deposits when we have a debt?
Because we need the cash for flexibility to pay our creditors.
To pay auditors?
Pay our creditors, to pay our bills when they fall due on the 20th. So if it's not a month where we're getting rates revenue, we'll put that cash into a term deposit, release it so that we can pay our creditors each month on the 20th as we get paid rates every 3 months.
I don't know. I mean,
So it's,
you can comment on it.
so yeah, it's about cash flow management. So the problem that council has, right?
But you cannot draw from it if it's a term deposit. You can have an online saving account. You can draw as you please.
Yeah, but hold it. Actually look at the dates on page 50 of the agenda. You can actually see that they're actually due in
30.
in July. So whenever, that's, which is outside of your rates. Also from a treasury policy perspective, you've got to also have sufficient funds available to cover your debt repayment as well. And that's a real risk that some councils a number of years ago got themselves into trouble because they didn't have sufficient cash. And when there was a bit of a liquidity crisis, they were paying significantly more than deposit rate on it than everyone else because they had inability to borrow. So there is that's why that you've got to manage your cash flow, but you've also got to comply with your treasury policy in terms of having cash available.
No, I totally understand. What I'm trying to ask here specifically, this $10 million, they are term deposit for long term or short term. What I see here, B and Z, that's 217,000, right? This 11 million, 12 to 6, they're 6 month term deposit. How you are saying you're projecting for monthly thing when the maturity is like 4 months, 3 months and 6 months? You're saying to pay your creditors, which is a monthly thing.
Yes.
You are not discounting, you never get that interest through the chair. Am I clear in what I'm stating?
Yeah. Yeah. So I think what you're asking, right, is why do we actually have?
It's called maturity mismatch. So if you have to pay creditors, but you are having a term deposit maturing after 4 months, what good it is? So it's that's what I'm trying to get my head around it. Anyway, I'll leave it at that.
I think next meeting, we might actually have a bit more detail about that. I think cash flow is really important.
Sorry, can I just add to that? It's kind of conflicting information because yesterday in our briefing, Sue sat down and said that we had, I think it was 4.7 million cash on hand in our, sorry, the figures are, I don't have the exact figures, in our in our briefing yesterday. So there is cash on hand.
What
there
is cash
for,
available, yeah? Sorry.
for cash flow purposes.
Yeah, through the chair, we have about $3 million sitting in the bank at the moment.
There's a forecast of 4.7, isn't there, though?
I'm not sure what
30 June.
figures. So I'm not sure what figures Sue's referring to. They might be for the annual
forecast
plan.
figures.
That might be their annual plan for next year. I can't confirm that. I can follow that up with Sue, what numbers she showed you. But currently we have about just over $3 million in cash in the bank. As we get closer to year end, we see a trend of our creditor payments on the 20th increasing because we like to get as many actual costs in and invoices paid before year end. So we are always cautious, more cash on hand.
And historically, right, councils have always billed a whole lot of stuff in June, which is due technically on the 20th of July. And if you look at the maturity dates, they're all the 20th of July as well. So, so what happens, right, when I was a Sue, right, I always used to have to make sure that our June creditors run, which you pay on the 20th, by the 20th, was always substantially higher than any other month. It's just unfortunately the way councils.
No, I do understand. Yeah.
So I think what council manager, I don't disagree with your questions. I think we just need some more, talk to Sue about getting some more information about how we manage our cash flow and the deposits for the next meeting. So everyone's on the same page.
Yeah, also in the same breath, I may agree with chair and also say more information is required because this also percolates down to when we talk about 62 million worth of projects and 20 million additional borrowing. While in saying that we also have 10 million term deposit.
Okay.
So it is not about cash flow on a monthly basis. It is about future projects as well.
Okay.
So we need some kind of clarity.
Well, I'll have a discussion with Sue.
Thank you.
And we'll bring it to the next, or circulate it prior to the next meeting.
Thank you.
Thank you. Any other questions in terms of our Treasury report? Now, just on that, we are still outside of our Treasury policy. And I think probably we need to reflect that in our resolution. That rather than just note the Treasury report, we just saying is we also note that we are outside of our Treasury policy because of the proposed free water reform and managing, because of the consequences of managing the debt related to the free water reform. Because that's the primary reason we're doing it. We don't want to be left with a whole lot of debt and have to carry that when we could have structured our debt and got it off our books a lot easier. That's the rationale. I think it's important that we just use that solution. You got that there? So separate, yep. So if you want to read out what you, no. Okay. So the resolution is that, do you want to read it out? I'm just going cross-eyed here.
A, notes Treasury Management Report, April 2023. B, notes that we are outside of our Treasury policy because of the consequences of managing the debt related to Three Waters reform.
Yep.
Is it the usual, chair, is it usual practice in all the council? Because all of them are involved in Three Waters.
Sorry?
Is all the councils in New Zealand are out of Treasury policy?
Not all, but a significant number. Okay. Those that have got in excess of $20 million relating to the Three Waters, yes. Because they will only get paid out proportionate when their debt falls due. Those with under 20 million, they will get all their Three Water debt paid when it transfers.
So, okay.
Okay.
No, thank you. That brings us to a very important question for the whole council is, should we extend our area of borrowing keep extending it beyond 20 million debt, because it may not be repaid by the three voters. At this stage, at this juncture, should we plan for the expansion for the next year and projects up to $62 million Mango 5, because I think it's one of the high risk category in Deloitte as well. At this juncture, when we are unsure of the money coming back from three voters, I think it's a good idea to defer these two. This is a key point of audit in this case. It's not just ticking the numbers. It's a principle, and I propose we should have a deep look at that. Yeah, thank you.
So what you're saying, if I can just clarify, what you're saying is, should we be spending, because we don't have the capacity to, if we need to spend the money before we transfer the asset and liability to the new entity, what you're saying is, unless that debt has been confirmed will get transferred to the new entity, we shouldn't be spending the money? Is that what you're saying?
Yeah, the debt which is above 20 million, and we'll have only proportionate figures paid out to us. Is it wise as a financial, because we are Audit and Finance Committee, to give a go call to the full council to say, okay, go ahead and start proposing all those mega projects for three voters, which may not be paid proportionally higher amount, obviously being above 20 million. I think a cautious approach to be done. Yeah.
Thanks, Sue.
So through the chair, so all we've got in the long-term plan is projects that we've carried over from last year, plus we've got projects that are basically taken from our long-term plan. And the DIA has said that if it's projects and they're not material, but they're from our long-term plan, or any new ones that are not over a certain threshold, then they will honour it and take on the debt.
Okay.
So they will take on the 62 million debt.
If the 62 million wasn't all relating to three waters, but whatever debt relating to three.
It is in writing? Yeah. Thank you.
Okay. Thank you. Question?
Yeah, so my question relates to the $10 million loan that's at the page 48 that we drew down on the 17th of April for 6 months, and which is due to mature on the 15th of October. What was that used for?
That was refinance of debt that had already, so the debt matured on the 17th of April and we refixed it for an 18-month period.
No, that's for 6 months, this one. This is a 6 month.
What page number, sorry?
Page 48?
No, it's 18
Okay, so does
months.
that mean you just haven't updated the maturity date table yet?
It's got maturity date of the 15th of October 2024.
Oh, sorry, I'm reading that wrong.
That's all right.
Gotcha.
Yep. It's easy mistake. Yep. Okay, any other questions, comments? So we've got it. No, I'm happy to move the two resolutions. One is we receive it, and then also noting that we're outside the policy has been read out. Do I have a seconder? Thank you. Thank you, Councillor Ron. Any further discussion? All those in favour, please say aye. Aye. Against, carried. Item 3.3, our work program. Thank you, Amanda. Sue.
Thank you, Chair. So this is just the work plan. We normally just put it in each quarter. We'll let you know that I have held discussions with the DIA earlier this week with a view to potentially not having our LTP audited because of the what our auditor has highlighted, that we won't have really good estimates on a lot of our repair work going through in order for our project work, therefore the project work we put in the LTP. The DIA is going around all councils that have been affected by Cyclone Gabrielle and trying to work out what kind of order in council might be needed to alleviate the burden on those councils that have been affected. So we may not need to have our LTP, long-term plan audited. Yes, so that's just to tell, so that means, and we don't know what the long-term plan might look like. They might also come back and say, we don't have to produce, review our policies. So that might be things that this committee looked at. They, for Kaikoura, my understanding is they had to do a 3-year LTP and didn't have to review their policies. So that's, so we just have to wait till the government makes a decision and we see what the Order in Council looks like and whether we're going to be included as a council or not.
Okay. Ed, you've got a question, thank you.
Thank you, through the chair. So what are the long-term implications for that if we don't audit the LTP? Now, does it create, for example, more work in the future? And then I just want to, before you answer the question, I just want to extend my concerns around that, given that we already heard yesterday that we've already blown the LTP budget by 1/3, from 40 million to 60 million, and now we're saying we're not going to audit it. When we should be looking at auditing it because we've already blown it.
Okay, so I'm just, through the chair, I can't quite understand that. I can't recall who said we've blown 40 million to 62 million.
Yep, so it went from 44, so I've got the figures here, and that was due to a number of projects. So, so the LTP was 42.8 million in debt, and it's now sitting at 62 million. So that's
Right.
1/3.
Okay, so the LTP we had last time was based on certain assumptions. So that was what you're talking about is the LTP that we put together in 2021. And obviously things do change, and when we've come to looking at adopting our annual plan, there's a lot more projects in there that are funded from debt. So that's why.
Yep, so what I'm saying is that, so the indicative figures look like we're already on track to increasing the LTP debt by 1/3. And so now for us to be considering not auditing it, when we know that we've had the cyclone and we know that the debt's going to increase substantially, I would rather have guesstimates in there so that we can fall back on something than to say, oh, we're not going to audit it. And then we find ourselves in the long run that we're looking back on what could skyrocket into.
So through the chair, I'll just answer that. So yesterday, what we were talking about, although we said the 44 million we've had, which has been stable for the last 4 years at 44 million, because we've been doing a lot of external funding or managing debt out of our cash flow. There's still 10 million in term deposits, which we're saying that we would use. So we wouldn't actually expect our debt to get to 62 because we'll use money that we've got on cash in hand.
We also went and refinanced 10 million on in debt. So, you know, we keep talking about this 10 million sitting there in the bank, but a couple of months ago we've refinanced to consolidate to the tune of $10 million. I think that it's huge risk for us not to at least audit and see where the wash up ends up being, even though I hear what we're saying about it's pure guesstimates at this point. We've got to make decisions based on the best information that we have available.
So one of the things you have to consider is the cost of the LTP to be audited will be about $240,000. So we could save that money. That'll be a saving. Also, the onus on staff, and we won't be able to prove the values.
Can I help here? Right, I think I'm actually advocating, right, that we don't audit any LTPs for any council over the next period of time. And the issue is, I've been around LTP audits before they were actually called LTP audits. The problem we have with an LTP audit is the process that the auditors have actually got to go and test all the assumptions and the nth degree about the assumptions when we have got a huge uncertainty at the moment about when things, both transfer of assets, value of assets, will actually occur in the future. It's now what I had a discussion with your chief executive the other day, and I'm advocating that there needs to be potentially, and I think probably DIA have dropped the ball on this one, is what level of assurance can be given not only to the council but to the community that the financial numbers are as robust as they can be without actually going through a full statutory audit. Because they've got to comply with a whole lot of accounting standards. And as Sue said, that's going to cost every council anything from $100,000 to $300,000 across the whole, roughly the 80 councils. And what value are we going to get out of that when in the 3 years, the LTPs will look vastly different? And that to me is a real concern, that there is so much uncertainty about the reforms, the transfer of assets, the value of assets and debt. I just don't know, let alone what other reforms. But I agree that we need some council and the community need some assurance that we haven't done this on the back of a cigarette packet. So there's a real balancing act, and I don't have the answer.
Is there a halfway point that we can do? Is there a halfway?
Can we just?
Sorry.
I've got Councillor Ash.
I hadn't finished. Sorry, this was a supplementary to my question, my original question.
Yeah. Okay.
Thank you. So is there a halfway point that we can do that doesn't need to comply with the accounting standards so that we know where we're at with it?
There is an audit that can be done, all right? And I was involved in one of those back in 2000, but the OAG decided to go. It's basically called a negative assurance, okay? It's called a negative assurance opinion.
Yeah.
But it doesn't. They actually haven't tested everything. It's not something that the Auditor General likes to do because they like to play in the accounting standard space.
Okay. So,
Councillor Ash?
yeah, thank you, Chair. Mine was just, it's not mandatory for us. We are not violating any of the policies by not doing it, right? As you are advocating, we should not go ahead and for LTP audit. We are not, is it mandatory that we should go for it when we are violating LTP or not violating, exceeding LTP by 1/3 of the amount? That's my.
Oh, so I'll clarify, at the moment, we have to do an LTP.
Legally.
It's not our choice.
Correct.
We are waiting to see what government does, and they are proposing to put an order in council. If that includes us, then that will tell us what we have to do,
Yeah.
and I'll bring it.
Oh, so it's a moot point. Okay.
Yep. Okay, it's under, right? It's above our pay stations, all of us collectively.
Thank you.
Any other questions on the work plan? I've got a suggestion on, and sorry, Amanda, to throw you on, but it's got your name against it. We've got insurance due in our December meeting. I'm very conscious of other councils. They're seeing a significant increase in their insurance. Like I was with one council and their insurance bill was $600,000. Their proposed insurance bill was $900,000. And I wonder whether in our September meeting before our renewal, we actually have a bit of a workshop or some process where we get our insurance broker, our insurance advisor, to advise us what's driving the insurance costs, and are there any options that are available for council to mitigate those costs. Okay, so this is what I'm suggesting. It doesn't need formal recommendation at this stage, but I think I'm just advising the committee that's what.
Who's gonna, are you gonna send it or who's gonna send it?
Sue's already got a note of it. So this is, you'd bring Aon in.
And she will inform before the meeting.
Oh, yeah, well, the issue is she would get on with it now,
Yeah.
because we need to agree dates, times,
Yeah.
etc., talked to Aon. To me, there's a whole lot of issues around insurance.
Yeah, thank you.
At this stage, do you know what primarily the increases relate to?
Yeah, basically, it's material damage and also public liability, predominantly material damage. And the reason for that is threefold. One is you've got significant increase in costs that we've talked about through the revaluation. Two is hardening of the insurance market. Now, what's caused that is because interest rates have gone significantly higher, there are less people willing to invest in reinsurance. So the people who are investing in reinsurance expect a higher return. So the premiums go up. And the other consequences of all the disasters that have happened from weather events around the world in the last 12 months. So we've got not a double whammy, but a triple whammy. And I know you've increased it, don't you? So I think that's and the issue that I have is council over or undering insurance, knowing its risk profile. And I don't know the answer. So,
Just got one point just to advise. I know we plan for annual financial reporting, and that normally in September. I would bring it to this financial accounts to this committee. That's early. We don't actually have to do it to the end of October. You've heard from our auditor that there's going to be a lot more complications, a lot more discussions this year. And also with the staffing that we've got, or lack of resources that we've got, we may not make that September. So I'm just highlighting that to you now.
I wonder whether we don't actually have a formal report there, or it's not the formal annual report, but we actually have that discussion with the auditor, whether online or in person, about what are the key issues around the audit. You know, I'm sure that's when you'll be actually starting to get close to your impairment discussion and what it actually means and what further work needs to be done, and is that achievable? I think that might be, rather than the actual full financial statements, might be an appropriate time to have it, because I think you're probably getting those at this, knowing the process, that's potentially when you'll be having those discussions with early September. When's the, you can remind me, should actually have it on our sheet.
Thank you.
All right. Okay. So, all right. Anything else? Anything else, Sue?
No, that's all.
That's all. 14th of September. Thank you. So maybe we just, so that's probably, you unlikely to finish the annual report by 14th of September.
We have been one of the first councils in New Zealand to do it.
Yeah, but this time round soon.
Yeah, we may not make it.
Yeah, and I think with all the issues that you've got, what I'm saying is that would be a suitable replacement.
Yeah. Okay, thank you.
Thank you for that.
Advisor.
Oh, it's 11 a.m. Pardon? Oh, thank you. Yeah, well, just, yep, thank you for that. I wasn't watching the time. So, do I have a mover that, any further discussion on the work program? So do I have a mover for the recommendation, please?
To not make the time?
No, all we're doing is we're just noting the audit, risk and finance work program for 23-24. That's all we're doing at this stage. Move Councillor Ash, second Councillor Ron. All those in favour, please say aye.
Aye.
It's 11 o'clock. Can I suggest we take a 5-minute break? Just adjourn for 5 minutes.
Okay.
And we're up to item 3.4, page 61, our quarterly financial report. Amanda. Let you get to your station.
You want me?
No, oh, no, yeah, wherever you like.
Got two Amandas. Can anyone two,
Oh.
again, I'm getting blasted with cough here.
It is cold. I don't know why it's coming cold.
25, sorry.
Is it on hold?
Let me just turn the fan.
We wanted cold.
Or you take minutes, I'll drive, all right?
Amanda.
Oh, that's why. Yeah.
I'm cold.
So through the chair, we're actually live. So
Yep,
can we have
yep,
Amanda?
yep. Amanda, sorry, thank you.
Hi, everyone. The quarterly finance report, this is the same report that was presented at the May council meeting. Main key points to note is the overspend and activity cost, which is the repairs and maintenance for the emergency repairs of the roads transport. We're waiting on the Waka Kotahi revenue claim on that one, and this overspend is offset by an underspend in employee benefits due to vacancies that we've held. We're also slightly down on water revenue due to timing of different areas. That's the main point.
Any questions? I've got one. Can you just highlighted it. Your water by meter revenue, you say, is down. Is that compared with other years, is it down, or is that just because of timing of when the meters are read, or what's the?
Yeah, so that's just down on budget, and it's because each month is a different area and each area is various revenue.
So there's no issues of major concern that you expect to be on target by the time you hit June, or you could be slightly down? You're not crystal ball?
No, I can look into that and we'll have a clearer idea this week.
Yeah.
Through the chair, I think with rates, that'll be fairly.
Rates, yes.
Be fine.
Yeah.
It's the costs of the storm damage
Yeah.
that we're having to pay for, and even the money that we're trying to recover from NEMA. Like we've put in a recovery and insurance. We've put in a first claim of 69,000. They've come back and said we can only claim 42 of it.
Oh,
We've
yeah.
got another claim going through, and so we're trying to finalise those claims. And so there's a lot of
Yep.
you know,
Yep. Oh, yeah.
repair work we're doing at the moment, still from the storm.
So the question I had though was over that highlight. I'm going to be on track by year end. That was my question. Any other questions on the financial reports? Okay. Do I have a mover for the recommendation, please? I'll move. Do I have a seconder?
Yeah, I'll check it.
Councillor. Thank you, Mayor Craig. All those in favour, any further discussion? All those in favour, please say aye. Aye. It's carried. Next item is our policies and bylaw update. Page 69. Welcome.
Would you want me to sit there or?
Well, wherever you like.
Thank you, Chair. If I may take the item as read.
Yep, absolutely.
Very short update, there are very few changes to the list. As I've stated in previous presentations, the majority of the policies, particularly in this year, are non-statutory policies, so they all have an elective review period, which is just to ensure that that best practice can prevail and things are reviewed rather than finding a 20-year-old policy, which sometimes does happen. Yep. Is the purpose of those. The only other update I have for the committee is that this is just a verbal update. The Freedom Camping Amendment Act passed last week. And that changes freedom camping under the Act in New Zealand, and for just in a very, very simplistic way, what the Act now does is, whereas freedom camping was previously allowed in any way, shape or form in New Zealand, unless restricted by a bylaw. It's now flipped around, and freedom camping, unless you are in a self-contained vehicle, is prohibited. So freedom camping in non-self-contained vehicles is now prohibited unless specifically allowed through a bylaw of council. So that's flipped it on its head. So just highlighting that, because in a previous report to council, I said that I would, to the committee, sorry, I would provide an update on freedom camping. You'll get a more formal update in the next ARF, but you know, it's breaking news from last week, so I just thought I'd update you down.
Thank you.
The chair.
Councillor Ash.
Yeah, just a quick question. You mentioned table 1, where no change to status in some of the policies which the review is overdue. And then you also have status update all currently under review. Do you mean the one above as well? The no change to status since March update are also under review or not?
Through the chair, sorry, I appreciate that the table looks a bit confusing. No, the no change to status since March update only applies to those policies, the 1, 2, 3, 4, 5 policies at the top of the table. Those 4 policies on page 2 of my item that I'm looking at, I'm sorry, I'm not sure.
Page 70.
Is those 4 governance policies are currently under review. So different. Doesn't apply to, they are not, the top ones are not under review as I've been advised by the policy owners. So I should add that I'm not responsible for the review of the policies. I manage I report back to you on what the status of the.
Thank you. All right. Any other comments, questions? I'm not sure whether it's a question to you or to Sue. I see fraud, whistleblowing and sensitive expenditure as sort of due. I just wonder whether those due dates might you want to align with the next committee meeting or the next 2 committee meetings. I would see that I'm not adverse to actually having the fraud policy, whistleblowing and sensitive expenditure rolled into either I think September might be a bit of a stretch, Sue, but certainly the December meeting might be more appropriate for this committee because they actually relate to risk.
Through the chair, if I may ask, these policies are all adopted and reviewed by council.
Yep.
So it is, so I'm not sure what the committee's expectation is in terms of being involved in any of the policies. I understand that those are particularly risk highlight policies, but it's unclear to me what the expectation is of the committee in terms of, so I can feed this back to the policy owners.
Yep.
In terms of how, because generally all of the policies are reviewed and re-adopted by the full council.
Yep. Good practice says that those 3 policies are actually considered by the risk committee, whatever form that is, and then recommended to council.
So I'll feed that back to the business.
Yeah, so that to me is what good practice says, because this committee is actually focused on risk, that those 3 areas do actually have some significant risk associated with it. That's what good practice says we should be doing. And I've had that discussion with the chief executive. Okay, any further questions, comments? So we've got a recommendation that we note the policies and bylaws update report. Do I have a mover?
Move that.
So councillor Ron, seconded councillor Ash. All those in favour, any further discussion?
Aye.
All those in favour, please say aye. It's carried, thank you. Next item 3.6, page 73. Glenna, thank you. Welcome.
Good morning. I take it that this report has been read.
So you should always do that, yes.
Fantastic. I suppose the one thing that I would make a comment on is that it was very good to see that none of our staff reported any major injuries, nor our contractors reported any major injuries, nor did we have any notifiable events during the period of February and March when we were in a response phase and then moving through into the beginnings of our recovery phase. So a lot of our workers were working under quite arduous conditions, particularly during the response phase, and certainly subsequent work. You know, there's been a lot of work that staff have had to do.
Thank you. Any questions? I've got a couple, believe it or not.
Please.
On page, no, sorry, I don't have the, it's probably, no, it's page,
I have the same page numbering as you.
oh, good, page 75.
Yes.
Middle of the page just before contractor management. I totally understand what's happened there. The question I have, how is that now being managed?
And so you're relating to,
Sorry, the big increase in small number of incidents around the office, common factor is about fatigue.
yes.
How's the organisation, how's the chief executive managing fatigue, particularly around the severe weather events going forward? I see that as an ongoing risk with the amount of work that's required.
Yeah, absolutely. So I think there's a number of components to it. The first is certainly work has peaks and troughs. So obviously during a response phase, and we had the weather events of February and March, there was a lot of work that was taking place. A number of our teams were looking specifically at response and looking at different parts of our infrastructure. So I think the first part to that is that the amount of volume of work has come down slightly. One of the things that we've done from a health and safety perspective is to really engage with our health and safety reps. So during this period that I'm reporting on, one of the things that we do very regularly is go out to our health and safety reps with what's called a health and safety conversation starter, which is a small amount of text about something that's quite topical. So one of the things that we've looked at during this period is fatigue, about how to identify fatigue levels in yourself and in others as one of those conversation starters. It's also very top of mind, so it's spoken about at team meetings. And is also followed up. So when we hear of smaller incidents, and certainly when things are reported through to our reporting system, say for me, then we follow up on those and look to find out what is the root cause of the incident, and again, try and look to see if that can be addressed.
Okay. I've got one last question, and then I've got one question behind you on screen.
Of course.
Top of page 77, let's talk about you had two incidences of working at height.
Yes.
I want to elaborate. So there was no injury, there was no issue there, but someone identified that you had two instances of people working at height that weren't restrained. Is that what we're saying?
That's right. So they were both by contractors, by the same contracting firm. And in fact, it was their own internal process that identified that they were not following their own process. So an incident review was done on both of those internally. We've reviewed it also. And then the project manager that was overseeing that particular project has also had ongoing discussions with the contractor about how they're going to implement the changes that they've identified.
Brilliant. Thank you. Answers my question, because that was, I was going to say who identified and what was the follow-up. Thank you. Got a question behind you?
Yes, of course.
Thank you through the chair. So my question just relates to Kaiwi Lakes and our risk around safety. So there's a contractor there that hires out the long paddle boards. And I observed almost all of the paddle boarders out in the deep with no life jackets on. Which is an increased risk of drowning, but also what is our risk as Kaipara District Council to that contractor, or I'm not too sure, like at the operational level, how the legalities work. But can someone answer that? Or
Certainly I can make a stab at answering some of that. My understanding is that there are quite tight restraints around the provider out at Kaiwi Lakes. In terms of, they've got a health and safety plan that quite clearly articulates that when somebody comes to borrow any of their equipment, that they do a proper health and safety briefing with that person, and that they also issue a life jacket to people who are using their equipment. So if you have observed that they're not doing that, what I'd like to do is go back and have a talk with our team at Kaiwi Lakes to gauge their understanding of the situation. But also I'll go back and have a talk with the provider as well.
I can send you the video footage. I just did a panoramic video of all of the paddle boards and no one had life jackets on.
Yeah, look, I think that that's a really worrying observation. So I will certainly follow it up, and in the next audit and risk report, I'll let you know what I found. If I just mention that there was, as we know, there was an incident that I reported on the previous audit and risk period, and there was one also that was captured in this. So we did do an internal review of our team about how our team responds if somebody is in peril. And we've made a couple of changes. One of those changes that we've made is to try and make the reporting much easier for our team so that those people that are internal to KDC are notified as quickly as we can. But what we also did is did a review of how our team handle the situation to ensure that the right people are notified in terms of FENS and in terms of ambulance, and then making sure that there's proper traffic management to get those emergency services in on site. And if there's helicopters landing, again, to make sure that there's good traffic management in place. One of the things that we did identify is it would be a very good idea for our team to actually practice doing this outside of an emergency event. So it is something that I've spoken to the Kaiwi team about, and prior to the summer season, they'll in fact do a practice run. We're also looking to see, is there some appropriate training that our team at Kaiwi Lakes could do with regards to being first responders. So far, I have to tell you that I haven't actually found anybody that provides that type of training here in Northland, but it is still something that we're looking for.
Okay, thank you.
Rich.
Yep.
Just a quick question. So that one person, again, Kaiwi Lakes, on 15th of January, the swimmer who was discovered and all. My question is very basic. So obviously we don't have any lifeguards there. Do we have any sufficient notice in terms of, in case of emergency, contact this number displayed there?
Yes, so the Kaiwi Lakes team have done a lot of work around signage, and so they've followed the Northern Region surf lifesaving guidance around signage. So there is very clear signage, and it's put in really good location, really good sort of spots in terms of where people enter and exit the water, and also an entrance to the lake. We've also now got life buoys positioned throughout the lake area, and that team have also undergone training on how they're used.
But there's a phone number there?
Yes, there is. So there's, yes. And what typically happens is that a member of the public will make their way up to the office, or they'll flag down one of the KDC team that are on patrol there, and then the KDC team will take over coordinating with emergency services.
Thank you. That's very good.
Thank you. Any other questions? Okay, thank you very much for your report. And I have a mover for the recommendation. Thank you.
Seconded.
Thank you. No further discussion. All those in favour, please say aye. Against, carried. Next item is our regulatory compliance update, page 81. Thank you, Sue.
There's not much to highlight here apart from just under for 100% for our building consents, but generally they have been completed within a couple of days of the 20 days. The ones that haven't met the 100% statutory compliance. You can see that building consents that we've received have gone down, decreasing, not so much for resource consents. And obviously we've met this month and been doing really well. The only other thing to highlight is, I suppose, that we've recently found the Mangawhai lookout tower, that it was deemed unsafe after engineering, and that's been fenced off and will be demolished.
Oh, okay. Any other, Councillor Ash?
Just query on Lookout Tower. Was it popular point or?
It's a very popular point for tourists and people as well. I'll get the instruction.
Yeah. Are we looking to rebuild or whatever if it's a popular point? Thank you.
Yep.
Just through you, Chair. We have spoken to the committee that oversees it. Their initial indication is that they don't want the lookout tower rebuilt. What their preference is that we utilise the timber that will come from the structure and just build seating around that area. So discussions are ongoing.
Thank you. Thank you. Thank you. Any other questions? We've got a recommendation there that we note the regulatory compliance update for June 23. Do I have a mover for that? I'll move. Do I have a seconder? Thank you, Deputy Mayor. Any further discussion? All those in favour, please say aye. Aye, that's carried. Next item 3.8, our quarterly debtors update report, page 87. Thank you, Christine and team. And support team.
Yeah.
Yes.
Black.
Yep. We'll take your report as read. Are there any highlights or further information you want to bring to the committee?
Not at this stage. I'll wait for questions if that's all right.
That's fine. Questions of Christine or Lani? Yep.
Thank you, Christine. Just a policy kind of question. So on page 92, July 21, the write-offs, you have 760K written off to 19 Maori blocks being reclassified as non-readable. Is it a policy to do it on a yearly basis? Because these have not been repeated in July 2022. And what are your recommendations? Because I thought there was a discussion of appointing a recovery manager or something.
That's right.
Yeah.
We have that. So through the chair, the law changed a year ago where it made unused, unoccupied Māori freehold land non-rateable. So at that time, we did a very brief, quick desktop exercise. I think I might have my years wrong, sorry, might be 2 years ago now, where we identified land that was obviously not used. And so those 19 properties were made non-rateable and the debt was written off. So we wouldn't repeat those ones again because they no longer got any debt. So we have employed a Māori whenua officer and she is focusing on those that aren't so clearly unused. So we're going through a process of identifying the land, talking to the people and ensuring what is being used, if it's being used or not. You can't really tell that from a picture that might be 10 years old. So it's a slow process of getting those relationships and understanding the use of the land.
Thank you, but that shouldn't take too long a time. Looking at the property, taking a photo, bringing it to you.
Okay, so through the chair, there are a number of complexities. I've given you an example in the report here of 400 owners. Sometimes we're making good connections with people. It does take time. First of all, our officer has only been employed for 6 months. Rating is a very complex area, so there's been a lot of upskilling and work to be done in that space. So, but aside that, it's also finding the people and working with them. So we have examples of we've found people and we've spoken with them. They're okay, you know, they understand what's going on, but they want to go back to the rest of the whānau and talk to them. And at that point, we're finding barriers coming up. We're finding that people, some whānau have very much distrust in council. What are we doing? There's no way they want to sign off and say that they're not using their land. So we're finding barriers there. So we might have somebody saying yes, and then the rest of the whānau say we're not interested in doing this. They don't want to tell us what they're doing on the land. We're hitting barriers. So
Thank you.
it takes a long time.
I would like some comments from our Maori ward, if possible.
Yep, thank you.
Thank you.
Yeah,
Question or
absolutely.
comment?
Yeah, so through the chair, I've been speaking to Sue a little bit more about this, to see how Far North District Council is carrying out their internal operational processes. So we might see a debt of 3 million, but in fact, potentially 2 million of that may be non-rateable and not recoverable. So then we're only talking about, you know, potentially $1 million of that where the land is being utilised. So looking at how Far North District Council are doing their process, they seem to have brought theirs down significantly over the last 12 months. And then that will allow us to really focus on you know, what we can recover from those amounts. The legislation is clear that if it is not being used, then it's reclassified as non-rateable. the feedback that I'm getting from the public is that they're not okay with signing the forms. You know, you have well-doing whānau who maybe live outside of the district, and they're trying to, you know, tie up all the loose ends, apply to the Māori Land Court for succession, and then they're not prepared to put pen to paper to sign what they consider as a legal document, when you know, the risk to them is that they're lumped with, you know, a $10,000 debt when there's 100 other, you know, whānau members. So if there's a way to try and reclassify without having to sign a legal form, or to put some real clear boundaries in place on the form when they sign it, I think that there'll be more of a willingness to sign the forms. Yeah, that's just a couple of ideas on how we can bring these levels down, because essentially the debt isn't really there. It says 3 million, but it might only be 1 million.
Yeah, through the chair, we're trying to make it as easy as possible for people to tell us what's happening with their whenua. So it's basically, we're trying to make it as easy as possible. We'd like to be sure that the land isn't being used before we write the deed off and turn it to non-rateable. It's just where the burden of, if we've made a mistake, we look at a map that's 10 years old and we say it's unused, and then it's found out that it is being used. Where does the liability, you know, who's made that error? Where's the fault? And is that fair to the rest of our ratepayers if we get it wrong? And yeah, just we'll take your guidance on how we can go forward with that anyway.
Councillor Deputy Mayor Jonathan.
Thank you, Mr. Chair. What happens in the situation where the land is claimed not to be being used, and the rates are written off, no further rates are charged, and then the landowners decide to start using it by grading cattle on it, or putting beehives on it, or whatever other activity might occur?
Yeah, it would change back to being rateable from the following 1st of July.
How would council know about that?
That's a good question. We wouldn't know unless we were looking or we were told. Very difficult one.
So Rusk.
So, sorry, through the chair, just on the same matter, if, I mean, you know, the council is one thing, which is monitoring is the main thing of, the main act of the council. So now you're relying on some information, as you said, you would not know. On the other hand, you are relying on information which should come through a certain channel. So can't you employ one person to go to those property and see whether they're being used or not used?
So through the chair, you're looking at some very large pieces of land. I don't know how you could tell from the roadside. We've done some site visits. We're going through that process of what we can do, but we can't see from the road all the way back through what's happening behind the trees, or, you know, we make a guess, but all we're doing is guessing.
Thank you.
Councillor Ron.
Thank you, Mr. Chairman. Can I ask, why is there such a spectacular increase in rates since 2017?
An increase in rates?
Yes.
The debt, you mean?
Rates, yes, rates outstanding.
So we're looking at
Page 88.
yeah. So every 6 years, debt gets to an age where it cannot be taken through the court. So they basically call that statute barred. So we write off 6 years old debt. So prior years, if there was any, they've been written off. So every year we write off about $300,000 worth of debt because it's got to that age where we can't follow it through.
So check me if I'm wrong here, but this is actually looking at two sets of circumstances, pre-1917 and post-1970, when the outstanding rates are recorded differently.
Oh, I'm sorry, I don't understand.
Can I reinterpret?
Yes.
Right. So what I'm thinking I've heard from Christine is this graph is showing how old the debt is.
Yes.
So therefore, the debt, all the debt pre-2013, even if it was collectible,
yep,
is no longer collectible and therefore the council has written off, therefore you've got some low values. You'll see the same happen for 2018 this time next year. The supplementary question to yours, I think, is the important issue. Oh, so why have we still got some potential ones, and I think I know the answer, is that we go back to 2011 when, hold it, if it's statute barred, 6 years, Christine, you, no?
Want me to fill in the gap there?
Yeah, fill in the gap.
Mr. Chair. So we have a few properties that we have gone through the legal process of putting charging orders on their property. So that debt is actually secured. So we don't write that off. Is that the answer you were expecting?
Absolutely.
And do we have a situation now where with this group of post 2017, the rates are getting to around about twice the value of the property? The outstanding rates?
No, they're not. There's a number of properties in that category. There's nobody that's got debt that's that high. I can't think of what the highest debt on one particular property would be. But that's made up by quite a number of properties, that debt that you're seeing there.
Okay, so help me here. I'm not understanding this well. The size of the outstanding rates exceeds twice the size of the, what is it?
Penalties, the penalties. So,
size of the penalties.
Yeah.
Twice the value of the properties.
No, can I just explain? So, sorry, Christine, I'm doing the job for you. So there's two parts to the outstanding debt. One is the rates, the pure rates, which is in blue. Then, and then the other one is the penalties. And the thing with penalties, it's compounded because you do it twice a year and it's on you're charging penalties on penalties. So if you don't pay your rates, you get the first lot of penalties. You don't pay that, then you get penalties on your rates plus the previous penalties. So very quickly, what this graph is showing is that the amount of penalties is generally double the amount of actually original rates that were charged.
Can I ask, is that leading these people to a situation where they have Buckley's chance of ever addressing it and therefore forced sales of properties is forthcoming?
I'm not sure how to comment to that.
Yeah. Can I ask Sue a question, just as supplementary to that?
Yeah.
So, do you, when someone comes to you cap in hand, look, I've got, for example, $1 million worth of rates outstanding, and we're using the example it's been, and my total debt, including penalties, is 3 million, because that's roughly what you'd expect. Is there any provision for me to for you, if I say, look, I'm going to pay this off over the next 3 years, that you actually charge me a lesser penalty as a carrot? You don't have that policy. You actually ask for the entire there's no way of negotiating.
We'll remit penalties
retrospectively. Yeah.
We don't have a policy that allows us to charge a lesser penalty.
Going forward.
It'd be administratively very interesting, but yeah, no, we don't have it.
Okay, so so you do have a policy that allows you to retrospectively write off the penalties if they're actually, right? And that's, I think it's really important that, council is this is a carrot and stick. So you're actually seeing the stick here, you're not seeing the carrot.
Thank you. So leads me to the question, is this in need of review?
Possibly, and it is one of the things that we'll be bringing through a briefing as we work towards the long-term plan.
Okay.
Our penalties.
Yep.
Thank you. So I take it that you'll lead the review?
Oh, yes.
Thank you.
So
I'll just say that a lot of the rates outstanding are on Maori freehold land. So legally, we have to write them off after 6 years.
Thank you.
Okay. And so what we're trying to do is get to the stage where
where land that should be treated as non-rateable is actually non-rateable, so we don't have as much outstanding rates or penalties. Because at the moment, it's a huge provision for loss of debt.
Thank you. The graph doesn't show any of that, does it? It sort of lies, damn lies and statistics.
Oh, it's a bit rough.
In spades.
All right, it's the information what it is. I've got there's a question behind you, Christine.
Oh, yeah, sorry, through the chair, I was just going to put my legal hat on and say that what we really actually should be worried about is the 2017 to 2018, because it's going towards that 6-year period at which council has to write it off whether it's rateable or not.
Correct.
The ones that are non-rateable that we've spoken about with the Māori, Te Ture Whenua Māori land is we're not so concerned about, because it's not really money that's there, it's the whatever proportion of that, and probably more importantly should come back to us in a form of a graph that shows the a split between Māori and non-Māori as well, so we can really crunch the numbers on the 2017 to 2018. To answer your question, Councillor Manderson, no, people will not, their properties will not be sold out from under them. That would be the absolute last, that would be the nuclear option for council. There's a number of different policies and things that we could apply to get those rates back, including a new policy on potentially giving council staff delegated authority to lessen the penalty as opposed to writing it off. But what council would do is that at that 6-year mark, if they haven't been able to apply all those other methods to recover it, is that they would apply to the court for a charging order, and that charging order would sit on the title of the property until such time as that property is sold, and then whatever the debt would be would then come back to council. That can't occur for Māori land. So again, another reason for us to differentiate between the two in these graphs, so that we really can understand what amounts we're actually talking about, as opposed to you're correct. It doesn't give us enough information in order to make a decision.
Christine, and then I've still got Councillor Nash, I haven't forgotten.
I'll respond through the chair. Our statute barred process we've just gone through for the 2017, and it was all analysed Māori freehold land debt. So none of what we're showing in there what's going to be statute barred is Māori freehold land debt. Any other debt that's there is secured.
Okay.
Any debt that we can collect through the processes we've secured. So we're trying to keep on top of that each year.
Do I understand? Thank you. Do I understand then that the Maoris are preferentially rated?
No.
Okay.
Yeah.
Councillor Ash.
Thank you, Chair. So she answered half of my question. So you're saying all these debt is a Maori debt, most of it, 90% or 95%.
Older statute bar debt.
Yeah. So my question is related to it, and you know very well, you will not be able to collect it in 6 years. It's a accounting exercise. You are applying penalties on these debt?
We are indeed.
What's the idea? I don't understand, because there's an encouragement, there's more carrot than stick in this policy.
So I think, do you understand the question? So the question, as I interpret it, is why are you charging penalties on rates outstanding when you know there's little chance of collecting it? That's the question?
Yes.
Well, it's set by council, the law, and we're following the policy that council has set.
Yep. So when you set your rates resolution every year, you say, well, all rates that are outstanding as of a certain date will attract this amount of.
So would I say if I was to rate the council and I'm the rating agency, I like to rate it very low because of unrecoverable debt.
Well,
and penalties are only contributing to it.
Well, have that debate when you set the rates. Okay?
Thank you.
So it might be the revenue and finance policy.
No, it's actually when your penalty regime is actually
Through that, yeah.
when you set your rates, right? That's the only legal mechanism you've got to set your penalties. But it would be quite difficult. I'm just putting, you come jumping into staff here, I've got to be careful, I might get into trouble. It's really difficult for staff to actually, if you had two policies that were going to apply a penalty on this group and not that group, because you don't necessarily got 100% data on which group current rates properties are actually setting. So it's what I'm going to suggest, and I think Christine's almost nodding at me already, is would be, you've already said you've broken down this information between general and multiple owned freehold land. Is it possible to actually have two separate graphs?
Yes.
Yep, and that would be useful for the committee.
Thank you, Chair.
Deputy Mayor.
Thank you, Mr. Chair. Yeah, I mean, this is a matter that's been going on for an inordinate amount of time now. I think I've been dealing with this for 5 or 6 years or something. We now do have dedicated staff members here. My first question is, how much longer in their contract do they have to run?
It's a permanent role.
It's a permanent role. I think it was a 6-month role.
No, she's been there 6 months.
Oh, she's been there 6 months, and what is she going to do when she's dealt with 100 odd properties?
We'll work through that.
Deputy Mayor, the issue is I'll put my staff hat on, right? This is a long process, right? I would imagine that it will take 6 or 7 years before you start to get any handle on it.
We would need to question if we're not recovering any money. Why we would employ someone for 6 or 7 years.
The question is, right, that's a really good question. And I would imagine that over a period of time, you would actually start to recover, right? It takes time, just based on my previous work history, that it does take time. And I would be looking for an update after saying is, well, what progress are we actually making in terms of getting rates? Now, I'm not sure of the role, so I might be stepping outside my brief here, that eventually this person might actually be having a role to actually encourage development. You are required now under the principles of the Te Whenua Act to actually encourage development, encourage ownership. So that to me is something that I would be looking for in a year's time is, okay, where are we on this? As a councillor, but I'm not a councillor, can't ask the question, but I'm leading you, is saying is, well, what progress, are we making and what are the next steps? To me, this is a long game, it's not a short game. You've got another question behind you, Christine, or is it a comment?
This is what I'm trying to ask, but you're sort of putting words in my mouth, so if I could speak, that'd be quite useful.
Yeah, sorry, yep.
Yeah. So what I would like to see, now that we have permanent staff in place for this and have had them there for 6 months, is that the next council, the next audit risk and finance meeting, to actually have some concrete information come back to us, like a map that shows the locations of the properties and a list of the properties and how much each of the properties owes in rates, who owns them, etc.
So is that achievable for the next meeting, or is it more of a?
I do also question the fact of identifying.
Can I just?
No, can we just answer the question?
I do have a problem with identifying properties and stating what the amount owing on them is. We have privacy in that. We have a privacy issue. That's private information.
It's not public.
It's not public information.
Can I jump in here quickly?
Yeah, is it relevant to the discussion?
Yes.
Okay.
So just to add to that, it's really easy to go on to Māori online, and you can get all of the multiple ownerships by just printing it off.
Correct. Yep.
So that's a really easy thing to do.
Are you, sorry, through the chair, are you suggesting that we're not doing that because we?
No, I'm saying it's easy for you to bring that information back to the next meeting.
I'm just a bit nervous. Can I make a suggestion? We actually look at what information we can actually. I hear you, Councillor Jonathan. Right, I'm not disagreeing with you, but I think we need to work through the logistics of how long it would actually take. And I would actually say is, look, can we have an updated status of the progress we're making, and what's the future direction for the next 12 months? Okay.
So be aware that if we're diverting resource into that area, we will not be seeing the
and that's what,
reduction that you're looking for.
Can I ask, can the complication of the Privacy Act be avoided if the people concerned are not identified, just the problem is quantified?
I don't believe
in that.
I don't believe that a property's rates that's a rates record, and that rates record is private to the person. So
the amounts is
I'm
irrelevant.
not suggesting that the rates record should be disclosed, because that
The
would
rates is
disclose
irrelevant.
the ownership. If you just have the cumulative sum and the problem, I can't see that breaking the Privacy Act.
Can I suggest that Sue and her team come back with some suggestions on how we can get that assurance that things are being progressed?
Thank you.
Okay. And then we debate what are the issues at the next meeting, rather than trying to formulate what's practical and what's not at this meeting. Okay,
Yes,
thank you, noted. Thank you. Any other questions? I've got some. I saw that look, Christine. Can we talk about non-rate stuff at the moment? Because you've highlighted there, and just explain the issues on top of page 10 of your report, page 96 of the agenda, about building consents, and particularly in your second paragraph.
I'll pass to my learned colleague.
Yeah, absolutely. Yeah. Thank you, Lani. That's top of page 10. Yeah, it's the building consent problem. And probably resource consent issues as well, I would imagine.
Yep.
Yeah. It's not the development contributions, but the actual, if you can just explain that probably a bit more detail, what you can and can't do. Or Sue?
I'll explain, because that is related to development contributions. It's when they might build two properties on one property, two houses on one property, and we get another development contribution for that. But obviously it's related to a resource consent and a building consent, and you've obviously got lots of conditions to complete before they'll pay the development contribution related to the building consent. I think that's what it is, Lani.
Yeah, so with the, sorry, wasn't quite clear on what you're asking, but for the building consents, we've got quite a lot of development contributions on payment arrangements. They might have been agreed through. So that is, we've also got other quite large projects in regards to development contributions that we're trying to go through and sort out. So the majority of the building consents is for development contributions, and I feel comfortable that all of them are being managed well. They're paying, the ones that are on payment arrangements, they're all paying. It's just that they're all fallen overdue, but they will eventually pay. So they're not sitting there not being paid. And others, so for instance, the banks would need code of compliance so that people can then withdraw more money to build houses, and they need that code of compliance to get the money to pay their development contribution, and things like that. It can get quite complicated, or just the delays in building have been troublesome for people getting mortgages.
Okay, because all I'm concerned is, right, that we potentially may not be able to collect some debt, because I think in your second paragraph, you're talking in the second sentence, you're talking businesses are being closed down. So that's the issue. If the business is actually being wound up, are we actually exposing ourselves to potential bad debt?
Yeah, so with with buildings, that's mainly residential private buildings. But with the businesses being closed, that's for monitoring. So that's food businesses.
Okay. Thank you. Right. Thank you. Yeah.
Just in relation to that,
Craig, sorry.
just in relation to that, are you finding the majority of people who are paying those fees at the end of their building process don't care because they have no debt with the bank. They don't care if you don't get a code of compliance anyway because they just don't care.
Yes.
They've got the use of whatever they've built anyway. They've got the end of it. Are they the ones giving you the issues?
They can do. Some have been okay and others we have probably more with resource consent. So if it's a subdivision, they have to pay. Sometimes they'll get charged their development contributions and then they'll say, I need more time, I don't have the money, I need to sell things and we will, and so they're like a prepayment, those ones, and sometimes they will then get credited and wait for them to get more money to be able to pay their 224, to get their 224. But other resource consents are also like, not just for subdivisions, they're for moving soil and all types of things. They've got a lot less, they don't need to pay because they've got nothing, you know, they can just put their hands in there as they've got no money. So we're sending more of them to debt collection now, mainly the ones that we don't have any leverage over. Yeah.
And because it's not a rate, we don't have the ability to get the money from the mortgage.
Okay. I've got a question behind you on screen.
Thank you through the chair. So two things. So are we, you know, I'd presume with resource consents, is it a practice to put charging orders by consent on in those circumstances? Because I understand that some of the contributions are quite significant and that surely we wouldn't be writing them off or.
So I'll just clarify. For development contributions where there might be a debt, we have a, usually with a developer, we'll have a and that does, it's only ever happened twice and they've paid up. I think we might have one outstanding. We have, we agree that they will owe us the money, they'll pay interest, it's all got a statutory, and it's got a statutory charge on the land, okay? So we are well protected for development contributions.
So you do have the statutory charge on the land?
Yes, we do.
That answers my question.
Also, I think there's a couple that are paying theirs off over maybe 2 years because they're a church.
Okay, and the second question that I have, sorry, just one other question is, it says I'm still on the same page of the report 96. It says that often the debts are not often collectible on the due date. So just my question is, why are we setting a due date for them when it's not the real due date? Because then it makes it look like it's an aging debtor.
Yeah, through the chair, I understand that. So a lot of these fees as well, they're prepayment. So you prepay your building fee, and then if you can't get your finance, then you might forego that. You might say, I can't afford it, and we credit it. So
yeah, but it's, what you're the example you've just given me is that it's a prepayment, which means it's a voluntary payment before the payment's due. So same question applies. Why are we setting an ultimate due date when we know that not to be essentially the due date? Because it's making our debts look larger than they realistically are, because it might be 6 months down the track that they're actually due to pay them, and then we've got a bad debt for 6 months.
I think that's just the way the process is. The building department will invoice the processing, start the processing, invoice it, invoice for the processing. We don't give them the consent unless they've paid, but as you heard the auditor say, it's not actually, it may not be. They've got to work out when the work's been done.
Yeah. Can I just, sorry, can I help, right? If, just explain it, right? So here, I apply for a building consent, right? And you're going to charge me, say, 4,000 for my building consent. That includes a number of inspections. So there's the processing of there's the lodging, the processing of the consent, plus I don't know how many inspections. Legally, until you've done the inspection fee isn't legally payable, but when the invoice is sent out for 4,500, it's sent out as a lump sum. And the problem the building team have is they don't know how quickly I'm going to need those inspections. They don't know whether I'm going to actually race through it and do it in the next 3 months, or am I actually going to take 2.5 years to do my build? And I think and trying to get the building department to actually invoice when the work is complete would be an utter well, it's possible, but you'd probably need another 2 or 3 staff to actually administer it. So from a simplistic perspective, that's probably is that what's happening?
It depends, so.
For building consent.
Building consent.
Yeah.
Yeah, and the thing is that if you don't get them to prepay, you've got no leverage.
Yeah.
So they don't need to ever pay it. Yeah.
Yeah. All right.
Because there's very little you can do with debt. If someone doesn't pay it, there's very little you can do unless you're spending more costs in legal than the debt's worth.
Councillor Ron?
Thank you. My concern is that the council over the years ahead is going to need more than ever its rateable income. And this sum represents potential rates if they were to be completed. So I'm wondering if that could be deferred as subject to them completing the works and paying for it over several years out of the rates. Then council has additional rates income. The development has taken place. There's employment for various contractors in council. To me, it looks like a win-win decision to move away from an annual viewpoint to a 5-year viewpoint.
I'm unsure that you could put that onto rates. There's quite a lot of, you'd be getting into the loan sort of situation where you're not going to meet that criteria.
Yeah. Trying to think, you'd have to use a targeted rate. So the risk is that you would have, I don't know how many developments you get a year, roughly 500.
Well, that's a resource consent amount.
Okay,
probably some of those, half of those land use, yeah.
Yeah, so say 500, you'd have 500 different targeted rates that you would actually have to administer without it actually then falling into the provision of the finance. I can't remember
Yeah, I'm trying to remember it.
the act. There's an act,
Yeah.
and enough that this is the bizarre thing that councils have tried to provide, particularly regional councils, loans for people to provide insulation and clean heat, right, to reduce emissions, promoted by ECA. But the problem is it's actually fallen foul of the Financing Act, and the MB have said the Financing Act, I think it's MB, overwrites the provisions of the Local Government Rating Act. So you've got to comply with all the financial disclosures as if it was a loan. My goodness, you're thinking rating is a minefield? For a council to go down that route, it's even it's a time bomb.
So just to clarify, there are some loans that we have in there because the previous council agreed to loans on some properties for paying their capital contribution. So we are still collecting, and it's through the system, and they'll be out in the long outstanding, but they've actually got time to pay it, quite a number of years to pay that. So small amounts, but the history.
Yeah, you legally you could do that, but I wouldn't want to be recommending it to staff, right? Because of the amount of administration. That was, and you know, when I was in my previous life, we had a postponement policy for certain people that couldn't pay their rates. The administration for the 30 or 40 properties was actually significant. So you've got to weigh up. You know, there's all sorts of balancing acts you've got to weigh up here as council.
I suppose an easy comment would be if it wasn't so excessive a charge, it wouldn't be such a problem.
But if, yeah, okay, all right, I will move on. Any other questions? So on that basis, do we have a mover for recommendation that we note the quarterly debtors report? I'll move. Do I have a seconder? Thank you on screen. Thank you. Any further discussion? All those in favour, please say aye. Those against, carried. Sue, 3.9, past audit recommendations, very appropriate, page 199.
So these are where we've had audits occurring over different parts of our businesses, and all we're doing is reporting through where there were recommendations and whether those recommendations have been fulfilled or not. And most are underway. I think there's some where there's gaps, and that's basically, I think it's Deloitte's, and it was in the roading area, and that's because they're working on maintaining the roads, getting quotes rather than the things from the audit from last year.
Thank you. You preempted my discussion. Thank you. Did you see my notes? Did you?
No.
All right. Any questions on this? No questions. So can I have a mover for the I'll move the recommendation. Do I have a seconder? Thank you, Councillor Ash. Any further discussion? All those in favour, please say aye. Aye. It's carried. Next item is we need to move into public excluded. Can I have a mover, please?
Yes.
Thank you, Deputy Mayor Jonathan. Can I have a seconder? Thank you, Councillor Ash. All those in favour, please say aye.
Aye.
Carried, and we'll take a pause to stop the live stream.